Good morning, everyone. This is Corey Hinkle here, and I'll be your host today for the Ankerstar Wealth Daily Update. We've got some few very interesting things to mention today. We're going to be looking at when markets bottom. That'll be the most important thing I show you today. We're going to look at bond and currency volatility that we saw last week. Very historic levels of volatility there. Possibly the bond and currency markets sending a message to some of the activities or decisions being made out there. And then we do have an interesting tariff update. Of course, there's many tariff updates. We're just going to look at one important thing that does affect a company you might own in Apple, and also some of my perspective on how that kind of came to be. So here we go. Before I get started, I want to remind everyone that this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com. And of course, the opinions expressed are mine and mine alone. All right, here we go. So let's start off with what I said was the most important thing that you'll see today from me. So this is called The Market Doesn't Wait. And we got to give a shout out to the Ritholtz Wealth Management team, or the Ritholtz Wealth team, of Matt and Michael specifically there. They, I think, kind of designed the idea behind this to help some of their clients understand that the market doesn't wait. So even here at Ankerstar Wealth, and of course, probably all around the country, you've heard of and seen some clients reach out and potentially want to exit the market during this uncertainty. So the Ritholtz team had the idea of, well, let's look at when does the market bottom in relation to uncertainty and negative news in the market. Well, it turns out that the market always historically bottoms before news bottoms, before fundamentals bottom, and before earnings bottom. So the market is looking ahead. You can see that sometimes the market will even bottom 13 months before the news and fundamentals bottom. This is important for us to realize that. So let's say someone is wanting to maybe exit the market, exit some positions because of uncertainty out there. If that were to be someone's decision, they would need to have this information available to them, and they would also need to have the understanding that if you exit while things are bad, the only reasonable plan would be to re-enter when things become worse. But there is no luxury in equity markets of waiting until the coast is clear or waiting until the dust settles. I guess it is an option, but it's an expensive option. And if you choose that route, you're going to leave a lot of the returns on the table because the market isn't going to wait. The market is always looking ahead. Michael Batnick highlights one specific example. How interesting is this? In October of 2020, Carnival Cruise Lines reported that revenue dropped from $6.5 billion in Q3 2019 to $31 million in Q3 2020. Revenue was down 99.5%. But on that day, the stock only fell 2% because it was already down greater than 90%. The stock was actually close to bottoming before the business even reopened at all. The market is looking ahead. Michael points out that when there's panic, he buys. That's his rule. He doesn't want to give the impression that he knows where the bottom is or when the bottom is, but he knows that crashes happen when things get way oversold, and that's the opportunity. But of course, right now we could be in a storm. We are in the tariff storm, right? It could accelerate. It could get worse. It could also die down, but you have to stay in the game. I wanted to get that information in people's hands. That's the most important thing out there. A couple more current events. The dollar showed extreme levels of weakness last week. The dollar is kind of the safe haven currency globally, or it has been. and will likely continue to be. But man, we're seeing a lot of volatility in some of the administration's decisions, and that is reflected in people's confidence globally around the dollar's safe haven status. This could also be a recessionary thing, these tariffs. It could cause that. It could be an inflationary trigger. Those are all things that aren't really healthy for the dollar. So I think the administration became increasingly aware of this fact over the course of last week and might be trying to backtrack on some of this kind of negotiation strategy that they had planned to fully implement. We don't know for sure what the original strategy was or what really has changed. We also did see extreme volatility in the US 10-year, as much as 72 basis points. That's about 3/4 of 1% move within a 1 week time on the US 10-year. I mean, that's projecting multiple things. That's projecting possible safe haven status, deterioration in U.S. bonds. It's potentially pricing in inflation due to tariff pressures. It's possibly pricing in recessionary concerns. What it's really pricing in is uncertainty. If the U.S. had been kind of the global safe haven, and now the U.S. policy is becoming more volatile and more unpredictable, global investors have to look elsewhere for that certainty. You also have to think all this volatility in the dollar and in bonds, any international business out there, it's making it much harder to do kind of cross-border transactions just because of that uncertainty. Currency moves of 10% in a week, that's really hard to account for. So here we go. Look at the dates on here. I did highlight the dates. On Friday, they released, CNBC did, an article highlighting how much a made in the USA iPhone would cost. Notice April 11th, 2025. This was with the 145% reciprocal tariffs that were thrown on during the week last week, kind of hastily so. So they estimate that these American-made iPhones could reach prices of $3,500. Pretty pricey for sure. But then notice what happened next. On April 12th, don't worry about it. We get exemptions on phones, computers, and semiconductor chips from those new tariffs. Okay. So we get kind of a reset. You see Apple stocks up today. The market liked this news today. How much confidence does the market have? We'll see how it plays out throughout the day. Keep in mind here, this is still an inflationary environment. Apple's still subject to, I believe, and this is also a testament to how hard it is to get accurate information. I believe Apple's still getting hit with a 30% tariff. There's like the 10% base global tariff and then a 20% China tariff. So Apple's still pretty heavily tariffed here, but the 145% tariffs were removed. So tariff, of course. That's the environment we're in. I wanted to get all that information in your hands. Remember, all of these current events, they come and they go. But what doesn't come and go is that the market is going to bottom before news bottoms. And if there's fear out there, there's probably also opportunity. And the more fear, the more opportunity. So keep that in mind. I hope you have a great day. We'll see what the market does. I think last I looked, it was hanging in there for today. All right. Have a good one, and we'll see you tomorrow, everyone.